A Wall Street firm by the name of D.A. Davison thinks that Nikola is on track to decrease its cash burn to $400 million per year by the year's end. They anticipate R&D costs, which started at $70 million per quarter, will be scaled down to $35 million per quarter. And when it comes to SG&A costs, which began the year at approximately $80 million per quarter, will be reduced to about $30 million per quarter. Taking these adjustments into account, along with grant money and additional partnership to offset investments in fueling infrastructure, Nikola aims to secure $600 million in capital needs going forward. And that's exactly what they did recently when they doubled their shares. Let's get into the article before we get into the analysis. This article is coming from FreightWaves. Nikola stock slides in reverse after shares count doubles. So a week after doubling the number of outstanding shares and exposing current holders to dilution, Nikola shares are retreating. Former CEO Mark Russell and the electric truck and hydrogen distribution startup itself are among the sellers. As a result, Nikola's share price dropped from $3.39 on August 3rd to a closing price of $1.95. Now, Russell was pushed out as CEO in November, so he might be a bit salty. He now has converted all his options granted in February 2019 when he joined Nikola as president. At the time, Russell had more than 8 million options. In a cashless transaction this week, he converted 3.63 million of them at a strike price of $1.06. Proceeds totaling 8.3 million. Now, Russell owns approximately 40 million Nikola shares in an entity called T&M Residual, formed with Trevor Milton, who's the company founder. Other top officers also sold shares, totaling a little over $500,000. On the day after the proposal to increase the number of authorized shares was approved by stockholders, Nikola increased the number of shares available through an at-the-market program, Citigroup, to match the $600 million Nikola needs to scale its hydrogen-powered fuel cell truck production and invest in distribution of hydrogen fuel. So why is the stock declining? Well, they're going to need more cash. Point blank, they're going to need more cash if they're going to get to any type of economy of scales to make some money. So this was an opportunity to sell, right? All right, if we go to the weekly chart, we can see a huge support resistance band at $3, and we can see that price never did close above this band, which signified bearish pressure. Also on the weekly chart, we see that price broke the short-term weekly uptrend and closed below this Friday. So where's price heading next? At a minimum, price is going to test this 140 level, which is where we saw significant volume back in mid-July. However, before price gets down to that level, it has found support at the 200-day moving average, right at $2. So we can see the last 3 trading days at the price decline on Wednesday. We had a doji candle on Thursday, and then we had a dip below that 200-day moving average, but we had a close above it. So that level is serving as support, but I don't think that support's going to hold. I think in the coming week, we're going to see price continue to move down due to all the selling pressure that started above $3. Again, Nikola's going to need a lot more cash. This sell-off is just the beginning. They're going to dilute the shares again because they're going to need more capital. Stay away from Nikola. There's other opportunities out there in the EV space. Thanks for watching. Subscribe. Please like the video.